Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and it is the final day of March, the 31st. It's going to be an interesting one, I'll tell you that. The final day of the quarter as well. So, I didn't do market wrap last night, so I figured I'll do that this morning as well. And we'll begin by talking about the closing price action, and then we'll swing over to the pre-market activity of the bond market, the TLT 20-year bond price. What we saw yesterday was what I expect fairly soon in the stock market, and that is a bearish reversal bar. We're currently short of the bond market. A bearish reversal bar and a breakout point failure. Take note of these wicks on top of these candlesticks. We broke out above them on Friday. What did we do yesterday? We broke down below them. That is a bull trap. Now, the Federal Reserve can't like this because that means that yesterday rates rose. Let's go to the 10-year. Still ridiculously low, but rates rose. Actually, on the 10-year, they were flat. But on the 20-year, they rose. I don't have the chart of the 20-year yield. And it looks as though with these Stokes, we're going lower. Strange. A bit of a divergence. The tips. Treasury. Hey, Terrence. Treasury inflation protected securities. So when I look at the chart of the 20-year bond price and I take a look at the tips, I find myself worrying a little bit more today about deflation rather than inflation. Now, granted, the tips have come a long way. Last Thursday, they sent a signal that they were tired. We were down yesterday on volume. Interesting. The dollar, an inside day yesterday, no new high, no new low. Both lines on Stokes will be down below 50 today. Look at the lower high here on the dollar. So I think that any rally in the dollar is probably to be sold, but you never know. It's so volatile. We did close off the highs of the day yesterday. Let's take a look at an intraday chart. Two-hour chart. Yeah, we're rolling over here. Stokes are rolling over. Lower highs on price. Hey, Lo, I would be careful because you have a trend that's going on out there. Stop paying your rent. So I don't know how safe those dividends are going to be. Cheesecake Factory started that when they announced that they were not going to be paying their rent to their landlords for the month of April. So I'd be very, very careful with, it's even businesses that are doing it. So you know that individuals are going to do it as well. I would be very careful. Case by case. The VIX. We spent some time on Sunday night talking about the VIX and how extended it was. And yesterday, after an effort to try to break out, it broke down. So we're looking for a continuation move lower. I haven't looked at the futures yet. Government bailout. Maybe if they thought If they thought the American consumer were going to bail the government out by not paying their rent, and ultimately they'll put the squeeze on the banks not to foreclose on the REITs. We're in that crazy world. I don't know. It's really a big question mark. I don't know. All right, so yields are coming in. My guess is the futures are up at current. If we made a new daily low, the transports flagging out here. Looks as though we may press higher. Same thing on the Dow Jones. I will note volume on the Dow yesterday was anemic. Very light volume. We were up 3%. So what I've been looking for is if we do close up higher today, are we putting in lower highs on volume or are we putting in higher highs? If we're putting in lower highs and we're pressing up higher, you know this is a short squeeze. And short squeeze by their very nature are finite. The small caps, same deal here. Actually, wrong chart. Similar chart, different volume. Similar chart. Volume a little bit better. Above average on the small caps. The S&P 500 daily chart. An up day, 3 1/3%. Look at this volume. It barely made it positive. You know, you can't forget about this volume. This is the market sending a signal. So if we close up today, we need to see rising volume. The banks, same chart pattern across the board here. It's setting up for a continuation move. Look at the volume here. It's setting up for a continuation move. The markets, the sectors that we're discussing so far, but hey Sam, good morning to you. How are things with you? But the volume is scary, downright scary. Emerging markets. Up nearly 4.5% on the day yesterday. On volume, that was okay. You know, 4.5% up volume. You'd expect to see volume like this, not like this. Biotechs. Hey, Will, good morning. Could be. Could be. I will say. You had the flu anyway, my God. Sam. We're getting hit hard here on Long Island in New York now. It's really crazy, to be honest with you. Energy. Bullish reversal bar yesterday. The indicators in all these charts so far look pretty good of the stock market sectors and indexes. Volume very good yesterday on energy, but that's because of Trump and Putin having a conversation. But you know what? I need to take into consideration the fact that we did have some seriously good volume prior to this as well. Let's take a look at how we look on a weekly basis. Put our detective caps on. Well, we were very oversold. Still are. All right, so ultimately we're going to look for a W formation before we got involved. So no reason to go chasing here. Here's oil on a daily basis. Still dropped down. Oh, my God. Over 5 1/3%. My God. There has to be a buy here. RSI 16.4%, 16.4. Still early, folks. Still on the first cup of coffee. Stokes very oversold. We are probably going to pop here this week or next. So we may be a part of this. The GDXJ, we are going to be looking to add more here. We added a little bit yesterday. Here's the scoop. Long story short, what we need to see is a breakout. So I'm not willing, as of yet, to get overly aggressive here saying, okay, we know that the bottom is in on the miners. And I've been talking a lot about NUGT these past couple of months until Direxion gets their act together and is able to balance out those funds. I want to avoid for a while. And I'll look towards the GDX and the GDXJ. Yesterday, again, 4 of their funds came in. Rather than having 300%, they were only able to load up 260%. I don't know. Somebody's not able to do their job over there. Therefore, I want to refrain from adding any more funds to those ETFs. So we're looking at the GDXJ and the GDX. And the reason why I like this price action yesterday is that, you know, if you take a look at this chart, final minutes trade, you saw buyers step in on volume. This is a 1 hour chart. But I'm not going to get really excited here until we start breaking out to new higher highs. We were putting in higher lows. Now we did weaken up a little bit yesterday. So speculative buy, that's probably going to be it until we start breaking out to new higher highs. So members, more to come here on the gold miners, especially now. I went over this on Sunday night with the VIX coming in, breaking down. At some point in time, we're going to see a bid under these names. It's going to be a risk-on environment for the gold stocks and gold. Silver yesterday rallied off the lows of the day. I believe they were up in the after-hours session. We're still long of silver. I'm looking for ideally a further pullback here and a filling of this gap. And then we'll look to buy more silver. We did book some profits here last week. So let's go to the futures action. Oh, I want to take a look at China. Every time I think about China and what they've done to their future, I just can't wait to reshort China. We booked profits on this a few weeks ago. And I'm looking to reload here. This is Yang, Y-A-N-G, Yang. But it looks as though first we're making lower lows. So I'm not ready yet to go buying. All right, let's go to the futures. All right, the 10-year bond price is down, therefore yields are up. Remember, we just went over the TLT, which saw a bearish reversal bar. That's a 20-year bond price. So we're seeing some money move out of bonds. Maybe it's because they want to go into stocks. Even though we have a cut in yields on the S&P 500, the yields on the S&P 500 is still more favorable than the stock market. However, you're taking on a lot more risk. Sam, the situation in Northern Italy here is improving. Good. Good to hear. I can't wait to be able to say that. It's deteriorating fast here. The US dollar. This to me looks like a bull flag setup, or bear flag setup, excuse me. Could be wrong. So we'll be watching for a break here. Either up or down. With the dollar, I want to take a look at the price of gold. It is down this morning. Gold has been extremely, extremely stable. So for those who were talking about Bitcoin as the new gold, I mean, I don't think that is really debatable any longer. Shorter term here on a 4-hour chart, seeing a little bit of weakness. $1,600, the lower band of the trading range, and that's exactly what we're in, is a trading range. Taking a look at the S&P futures, the mini futures. All right, we're up about a little over 3/4 of a percentage point this morning. Keep in mind, we do have resistance above. We failed to hold it on Thursday, Friday. But good price action. Watch. Remember that volume. I just went over volume from yesterday. You need to see volume rise here. The Russell 2000. Looking good here. Now, volume on the Russell was looking good on a daily basis. And it looks as though we may break out here. As early as this morning. The NASDAQ, we're up over a percentage point. New daily highs. You know, people want to ask whether or not we're standing by the fact that we believe that this is a bear market rally. You darn tootin'. And it's very consistent with typical bear market rallies. We rally strong, very strong, and then all of a sudden, the music ends. You get a bearish reversal day at resistance, and you're dropping like a rock. And you wonder, how the heck did I get here? Buying stocks, you find yourself long again. Silver, good night overnight. I went to sleep last night. Silver was looking good, and I was wondering whether or not it would hold up, and it has. So we're looking for a breakout here on silver. Again, we're long of silver. I wanted to add more lower prices. I don't know whether or not I'm going to get that opportunity. The VIX continues its decline. So you're seeing fewer and fewer traders looking to put on insurance. And they're taking on more risk. Let's check out oil. Oil. Ooh, oil up big, reversing yesterday's losses. Back over $20. Gold with its big boy pants on this morning. But still, we bounced off of support. We remain in a trading range. You can't get excited here until we begin to break out above this upper band of resistance in green. Yeah, well, I heard about NUGT and Jane. I doubt, I get the sneaky suspicion that we're never going to see 300% again. Nat gas. All right, so energy is flashing some life here. So we may get a breakout here on nat gas. So keep an eye on UGAZ. Let's see what that's doing in the pre-market, if there's a trade to be had here. Yeah, they're moving it up higher in the pre-market. Nice sound base. Pretty good. The miners taking a break today. I think what's going to happen with the gold miners and with gold, it's going to take a continuation move higher on this market, VIX to come off, and then the music to stop. And then as the money starts to rotate out of the stock market, you'll see it move back into the metals, into the miners. So I doubt we're going to be adding any more here for the next few days. Unless, of course, the markets begin to roll over and we see a bid under the miners. Just want to check back in with gold really quick. See if we have... Yeah, it's continuing to weaken up here. Okay. This is on members area. I need to get to our chart requests. All right. Google. Bear with me, folks. I just got to take some notes. I got started late this morning. TBP. Some of these I already went over. Okay. let's go over. We'll do a couple of chart requests here. Turning Point Brands. All right, so this is busy. Let's pull back here. I went over this one the other day. We remain on, this is a monthly chart. We remain in the downtrend channel. We're off the lows of the month, obviously. Noted by this wick. Lower band of support in blue, upper band in black. Weekly chart attempting to break through resistance. It's doing exactly what it did last week. It's struggling. We had a breakdown in early March. Now it's fighting back. We're not going to be a buyer here. We're not going to even think about buying until Friday afternoon. I need to see this stock trading above this line in blue, which is now resistance. Same deal here on a daily chart. We're attempting to break out. We remain in a trading range. This is a wedge formation, classic. We could stay here for a while. So right now we're at the top of that trading range. When you're in this trading range, it's safe to assume that you will retest or retrace back down to the lower band. So right now I would avoid, it's quite possibly short on a break to new lower lows. And I would put my price target at around, on a short side, 1494 to, let's say, 1370. Gush. I know Gush will not soon be trading. I can't even go over this. Don't trade Gush. We'll take a look at Dig in lieu of Gush. All right, so interesting price action here. On a daily chart, we'll come back to this. Because I want to illustrate first the damage that's been done here on a monthly basis. We're very close to the lows of the month. That's probably going to change today. You're going to see this come off a little bit. We should close up higher today. But we're certainly not going to recapture all these losses for the month. Weekly chart. We retrace down to support. We've been bouncing around here. We're now on our third week. What I'll be looking for today is a new higher high out of this wedge formation. Daily chart. Now, here's where it gets interesting. Yesterday, we were able to open up and close above resistance, which is good stuff. Our Stokes are rising, RSI is rising. So things are looking good here for Dig in the short term anyway. Longer term, still pretty bleak. But there is a short-term trade to be had here. I'd be looking for a rally up to around the 930 level, thereabouts. But this is upper band of resistance is declining. So understand that 930 mark gets lower and lower. That price target to the upside declines on a daily basis. Yeah, well, I think there's probably going to be legislation coming out after after we get out of this about these leveraged ETFs. They really screwed the pooch. What else do we have here? Goldman. Goldman looking interesting on a daily basis. Let's first go monthly. A lot of damage has been done here. Remember the up volume on the banks yesterday was horrible. Horrible. There's resistance. So this is a bear flag setup on a monthly basis. And we have broken it. So as we proceed into the new trading quarter and the new trading month, I'm not optimistic about the banks. Assuming that they all look like this. Let's check out XLK. No. Goldman specific. So Goldman's got some trouble here. Weekly chart at current. We are back above support. We did manage to close above it last week as well. We're doing a retest this week. Take note of these topping tails here. So we're going to have resistance at the 170 mark. Interesting chart. I'd be looking for a breakout here before I got involved. We're way too close to resistance. I would need to see a close above 170. Where did we close out the day yesterday? Closed out at 160. Too much risk, not enough reward for me to go hoping that we rally through these resistance levels this week. Because my memory keeps going back to the volume on, I want to keep doing this because this matters. Here's the XLF yesterday. Very nice price action. Bullish key reversal bar. Looks like we're going higher. Our Stokes are looking pretty. RSI looking pretty. Volume, non-existent. This has to change. All right, I'm going to leave it off with VICR. A few of those already went over. Good price action yesterday. We spoke about this one on Sunday night as well. All right, we've held support. We tapped it, rallied back strong. Still down below resistance levels at 42.68. Weekly chart. Here is our uptrend channel. We closed right into it yesterday on a weekly basis. That makes me nervous. Will we retrace back down to this lower band of support? There's a very good chance in this market environment. And if it breaks, it becomes a short. Yesterday, a very good day. But again, we have resistance immediately above here at 42.87. So be very, very careful. Here again, 4-hour chart, a lot of resistance above. Now, if we close above that 42.87 mark, heck, maybe we're going to head up here to 49.59. But I wouldn't take the risk right now. And with that, folks, I am going to say everybody have a profitable trading day. And please be safe. And I will talk to you soon. Be well.